Wake up, motherfucker.
Yo, what's up? It's April 29th. All right, 2026. Okay. All right, finished up all the earnings, huh? Okay, let's see what we got. Pretty boring Fed day, too. I don't know. Jerome Powell just got asked a bunch of questions about Fed independence. Pretty boring, so nothing happened. He's going to stay on as a governor, okay, as an FU to Trump. That's expected. No surprises. 4 people dissented on not raising interest rates. So that's interesting. I think when you add that with the Bank of Japan on Monday, 3 people over there as well. So I think going forward, there's going to be more and more pressure to raise interest rates. So we'll see how the new Fed chair is going to do. I don't know how he's going to, if Jerome Powell stays on, and yeah, it's going to be hard to say if they're going to cut rates. So what's probably going to happen is they're going to keep the rates steady as long as they can. Bank of Japan will probably give up, though, first. They'll raise interest rates first. And then we'll have to see how England does and the rest of the EU. So those 2 central banks, the Bank of England and the ECB, European Central Bank. Okay? And that's pretty much going to affect your gold. So yeah, Eric was asking about gold. Well, that's why I don't play gold. Unless gold is going in a straight line up, everything is dependent on currencies, the euro, the yen, and other people's interest rates. That will determine where gold will go. So right now, the 2-year yield is spiking. Okay, the 2-year yield of the US is spiking. That hurts gold a lot. If the Bank of Japan's are not raising interest rates soon enough, then yeah, demand for gold will probably be low at this point. People rather go somewhere else, like T-bills. If the 2-year is spiking, then the 3-month will follow. Then people will rather stay in bonds, right? Short-term bonds. Gold doesn't pay interest. Gold is a shiny rock where I have to pay people to guard. If I have gold, I have to pay security to guard it. I'm actually losing money on gold at this point. I'd rather buy bonds, which will pay me, and I don't need to buy any security guards to protect my bonds. My bonds are on a computer somewhere, right? All I have to worry about is some idiot how and they get all my bonds or something. That's it. So there you go. That's all there is to it. There's no demand for gold if this is the case. So that's why you don't stick around for gold. Otherwise, just stick with stocks. That's it. Stick with stocks. Okay, let's go here. Let's see what we got for the futures. Let's see this. Okay. So seems to be doing very well here. All right. There was a lot of indecision right when all the numbers got released. Nobody could figure out what to do. So I had to wait until everybody talked. You know, you got to wait for all of them to talk. Microsoft, Google, Facebook, Meta, Qualcomm, all of them have to speak, right? You have to listen to all of them. I didn't listen to any of them. I just almost 5 p.m. my time. That's pretty much when everybody spoke on the conference calls. Okay, once you get everybody speaking on the conference calls, then you know what's going on, because nobody could figure out if they wanted to go up or down in the markets at this point. So we went down, we went up, and then after they finished talking, we went up higher. Okay, good. So I'm just going to guess what they said, because I assume that Google said they're going to spend more money on data centers. So after a couple hours, I started seeing SanDisk go up a little bit more, and then some other the memory and opticals, so they went up a little bit more. So I assume Google said that. Okay, Google's the big boy. I'm assuming Microsoft did not say something of that magnitude. Amazon, maybe they said something too, but mostly it's always Google, right? So that's it. Now let's look at Bitcoin right now. Okay, so Bitcoin still dead in the water. So think we're gonna have to wait till next week. I don't think the looking at Hut. I don't know. Hut might just go up anyway, as long as people talk about data center spend. So it's mostly an AI stock, less of a Bitcoin stock. Hut, I MSTR probably gonna keep going. All right. Well, I don't know. I guess the Fed doesn't want me to talk to you guys. I'm sorry. I don't know what you guys heard, but I already gave everything. I already told you exactly what I think, so that's about it. I don't know when it cut out, but that's all I got for you right now. Okay, so I wasn't in the markets then. Okay, so I don't know where I was. Do I have to go over everything again? Cut out at MSTR. Okay. Um. Okay. I don't know then. Let's see. I guess I just said I short MSTR or whatever. Yeah. Okay. Because that's not the important part. Oh, all right. Blah blah blah. Bitcoin's going down. Okay. I don't see anything improvement there. I said Hut, Iran, Core Z. We'll have to see. Okay. Um. Let me mention also like Open AI. So a lot of that stuff was affecting like Oracle and um. Hmm. Still haven't decided if I want to buy Oracle here. And then what was that? Core Weave. Core Weave has been going back up already. So yeah, yesterday looked tempting, but it was like, man. So there was some open AI drama. I mean, I don't know what's really mattering about like what really matters, you know. I don't think any of this stuff really matters. It's just noise. And then you have the UAE getting out of OPEC, and then people were debating if it's good or bad for oil, and then nobody could decide. And I don't think it matters. I think any kind of drama was going to make the semiconductors go down anyway because it already went up so high, right? So there was anybody could make any excuse for it to go down. But as far as like, oh yeah, this is a real good dip, probably not. Probably not, right? Any of this stuff is probably not going to happen. Anyway, so yeah. So here we got the boxes here. So I shorted up here on Friday, right? And you could have got out here. You could hold it still. It doesn't matter. If you're up all the way up here shorting it, like you would have got like SOXS down here at like $13.50 or something. You could keep holding it if you want. It doesn't matter, right? But I think this is the range right now we're building. It looks like we're trying to build this kind of range. I'll have to see how tomorrow is. If tomorrow is a gap and crap, so it gaps up and craps out, then yeah, then that's it. You can just gap and crap. Okay, gap and crap. That's it. Okay, back to this. So I guess it cut out when I'm actually talking about something more important. Okay, this is more important. Okay, 3-month yield and 2-year yields. Okay, so 3-month T-bills and 2-year treasury notes. So you count the spread between them. So like I said, I've talked about this before. When you have a big drop like this, big drop like that, that pretty much, or here you prelude a drop in the S&P 500. Okay, and then so right now we've been going down for quite a while, right? Going into the March stuff, drama, and it's still moving down. The downtrend hasn't been broken yet. It's still moving down. So that means what it's telling me is that by the time we get to July, August, so that's when we talked about the cycles, right? The cycles say by July and August we should start seeing a rollover down into November. Okay, midterm elections. If this thing breaks negative 0.5, so negative 0.5 is a little bit more important. Like it dropping down below negative point, like you see here. So this thing was dropping well into August, September before Jerome Powell said he gave up on inflation. So this was 2021, right? September, October, August, September 2021. And then we started dropping real bad starting January, February. Okay. All right. And if you see here, we crossed over late November. So this was the time he gave up for sure. He just said, like, yeah, I give up. I'm going to start raising interest rates real fast. All right, guys. And then, I mean, the market still was kind of like holding it together. I guess people didn't want to sell because of tax reasons. If you sell profits, then you would have had to pay the whole, because 2021 was a really good year. Okay. Especially if you bought from 2020 from the COVID lows, you had a lot of profit and you probably didn't want to sell all of it at once for that tax year, right? You would spread it out between 2021 and 2022. So people were just holding it as far as they could into January. Once January hit, after New Year's, they start selling immediately, dumping, because you could see like the bond market was really going to hell that first week. People really didn't pay attention to that. And then the second week, it started going even lower. And then the rest of the month, January, it was just all the way down. But the bond market always sniffed it out in September before Powell. So the bond market is always the one to look at. And they always look at the 2-year notes. If it's doing like this, it's basically saying the Fed is making a mistake and they should be raising interest rates. They have to raise interest rates. Okay, they have to raise interest rates. You can ignore it as long as you can. If you do that, if the Fed is doing this, because Jerome Powell is staying as governor, that's one vote. Okay, he has one vote. He could influence the votes, okay, to keep the rates as high as they can be. They might not raise interest rates, but they'll keep it the same for longer. If they keep doing that, and something breaks, probably what's going to happen is something will break, something in the system will break, and then the Fed will be like, whoopsie, and they will start cutting interest rates and change their minds. That's probably what's going to happen. Now, I don't know if that's what's going to happen in July into September, if something's going to break then. If nothing breaks then the market probably will just be rolling over for another reason. But we expect something to happen, okay, during that time to roll over. All right. So watch this 2-year. 3 month spread. If this thing goes below 0.5, negative 0.5, that's when bad things starts happening. Really bad things. Okay. And you can kind of see it here during 2018 into 2019. Like we got below negative 0.5, and then the market went sideways. Okay, the market went sideways. It went up and then back down. It went up. It was quite wild, actually. Right into COVID. And then the other time this happened was during the 2015 2016 financial crisis with China and Europe. If you remember the Greek debt in the EU, the Brexit, I don't know, there was some Chinese crisis too. I don't know. All of it happened at once between 2 years, and everything was crap here. So we went sideways again. The market went sideways. Okay. And then the other times we had this were probably, of course, like, yeah, the 2008, 2007 stuff. Yeah, no shit. But before that, I guess the dot com zigzag, 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 zigzag. Yeah, I think before that was a little bit confusing. Yeah, we had the dot com bubble. So, I might have to look at this more carefully. I don't know. We might be at the same place as we were at the dot com bubble. So we might be entering this kind of regime where it's like it's really confusing. Yeah. So we'll study that when we get there. Right now, it's kind of premature, but uh, watch this one. If this thing goes below negative zero point 0.5, then I'll have to look back in history and go like, well, which one will it go and act and behave like in the past? So that's it. Okay. Yes. But well, yeah, that's because of open AI. Yeah. So I mean, doesn't mean anything. It's just noise. So they said like OpenAI is not gonna make as much money as before or whatever. What happened to before? Last week everybody was loving OpenAI. Now they're saying OpenAI doesn't make much money. I don't. Who says that? I don't know. Everybody's just making up stuff to manipulate the markets. I don't really care. Right now, it's like, is it buying the dip, or do we have to wait for another dip next week? That's my question now, because we had a dip on Tuesday. We had a dip on Thursday, a dip in software on Thursday, a second dip on Tuesday, right? Okay, but is there a better dip coming? That's the question you got to ask yourself, because this is still too elevated. This whole level here is too elevated. I don't believe that will just fly up uh, when Apple reports and then but SanDisk will report after the close on Thursday. So people might still be waiting on Friday. Okay, that's the only thing you got to worry about. Do you buy it or you don't? Okay, I don't know. I'll be looking at Hut, IREN, and CoreZ. Those three. CoreWeave, Oracle will be next on my software list. All right, those two. Those will be more important, I think. Oracle will report like a month away. Adobe I already got last week. Adobe will report a month and a half away, maybe. I don't know. I think it's in June, so it might be a while. Oracle might be like over a month too, actually. It has to be after Nvidia, because next week is just AMD. That's it. AMD will be the one after SanDisk tomorrow, and Western Digital. It's just AMD. Nvidia is like the May 20 something. It's like towards the end of May, so that's gonna take a while. With a day of dip out on the top. Yeah, I already got my position to short it there. So I got SOS at just in case. I just got that one at 13. So 1350, somewhere around here at the close, near the close. Get that. So I'm just holding that one. I don't know. And then I got MSTR short. So let me see. I used MST. Yeah, something like this. One of these. There's two of these ETFs. I don't know. I don't remember which one I picked. Okay, you buy this. I guess I bought this when? Monday? Yeah, I bought this on Monday, 5 something. So, okay, short Bitcoin, short semiconductors, if you got it at the right price. If you bought it, if you're trying to short it now, yeah, you can't because you know that Google or because you had a whole bunch of earnings, okay? One of them is bound to be doing good. That's it. That's really it. They can't all be bad together. One of them has to be doing good. So Google is the one that's probably really kicking ass out of all the other ones. Okay, so yeah, you got to wait a while before to see. So this could be like an A, B, and then C. Once we get C, then we can go down. Okay, you got to wait 1, 2, 3. Okay, you always gotta wait. These come in waves now. Okay, they don't go in straight lines. If you got in here and you're waiting to buy more shorts, then you have to wait and see if this actually stops and goes down, either Friday or maybe even tomorrow. Because tomorrow it could be a gap and crap, right? Everything opens high and then all of a sudden they just sell off. People don't want to hold it for SanDisk, Apple, and Western Digital. They're like, well, oh, time to get out because they're all just trading, right? They all just traded the bottom from yesterday and they're all just trying to get out and then nobody's buying it again. So then we just trap everyone up here and it's just like, well, crap it out and we just go down. So it could just be like that because I have no idea if SanDisk is and Western Digital is like, but I mean, Seagate did well, and Seagate is just hard disks, okay, rotating magnetic disks, and they did okay. So I don't know. I don't think like SanDisk should be bad, but because they pumped SanDisk so high from last week, maybe maybe it's just too expensive to buy SanDisk anymore at that point. SanDisk has to report something really good, right? Because this thing is like, well, and then tomorrow it could just like keep going down. It'd just be like, yeah, okay, we go up a little bit again and then we go down again, right? You're flying up here. So that's it. And then you push up Intel again. Intel, like, okay, you keep pushing this, right? And then you're trapping people up here again. So that's the problem. That's the problem. Okay. And right now, like, if you look at it, NXPI, this is the main reason things went up for semiconductors. This went up 25%. Okay. So you got like Texas Instruments, ST Microelectronics, NXPI, three of the most boring semiconductor companies, three companies that mainly do automotive chips, so the chips that go inside your car, industrial chips, the chips that go in nuclear factories, uh, steel factories, whatever, boring, very boring. Yawn. Okay, not AI. They all went up very high together, right? And then you add that with Intel. So these boring semiconductor companies plus Intel, the worst performing semiconductor company outside of maybe Qualcomm. So they all jump up very well, right? They're all hyped. They're all hyped. So they're all trying to play catch up, okay? And now they're all overvalued. They're all overvalued. Intel is like what? Probably near 200 forward price to earnings. Okay. All you need is one bad news while everybody's up here, and then it will just all collapse. So yesterday was kind of like a trial run for that, right? They said like OpenAI is not going to make as much money as they thought it would. Blah blah blah. I mean, they're trying to tease people with this. I'm pretty sure they're probably going to say, well, they're blah, 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 blah. Like tomorrow we'll see what happens because we already have earnings from all of the big hyperscalers. And I want to see if like some a-hole is going to come out and say like, well, okay, they said this and this and that and that. They'll nitpick, right? They'll start nitpicking what they said in an earnings call. They'll nitpick all the results. And they'll be like, well, maybe the growth isn't as good as we thought it was, or something like that, right? Goldman Sachs will say something, JP Morgan will say something, all these banks will say something, they'll critique it, and then all of a sudden, like next week, everything goes down. That's usually how it goes. That's why I don't play earning seasons. I don't play earning seasons. Okay. If you played WebL or you played SoxL or you played something, you just bought in March 30th and you would have got up, right? On all the way up here. I sold around here, right? When it got close to 50%, right? You could have like got a little bit more, right? You could have got like 60 something percent, right? But that's good gains for a few weeks, a couple weeks, and you got that good. That's before anybody opened their fat mouth about earnings. So my philosophy is I never play earnings. Like unless I feel like gambling. Unless like, well, I feel lucky today kind of thing, right? I don't play before, I don't play a little bit after. I watch and see what it does. Okay. Then once I see what it does, I'm going like, okay, how does that look like in the long term picture? Can it keep going up in the next several quarters after this move? Okay. Because usually you'll see when things change in earnings, right? So, what's important earnings to be looking for is like, look at Moderna. You see this? It's being pushed down into earnings Friday morning. I think it's Friday morning. Yep, Friday morning. So this thing happened before. You see this? Moderna, it was pushed down into earnings right there. They trapped some people up here. Some people that bought early up here, they got trapped. And then there was some FDA news, and then they probably got scared and got out here. But that was the great time to buy it because then you could go back up. So we'll have to see how this one goes. Okay. This looks very tempting. I don't know. I don't know what's gonna happen tomorrow. Maybe I'll buy it. Maybe I'll buy MR. So MRNX, if you want to buy leverage, MRNX, you buy leverage Moderna shares. You can buy this one. So this 2x leverage. I don't know. That's high risk though. I don't know if you want to do that before earnings. It could be bad earnings, right? It could just push all the way down to 36, and then that's a better place to buy instead of buying early 1 day ahead. But yeah, that's something to look at because there's always going to be manipulation before and there's going to be manipulation after. That's it. So yeah. And you don't know how high something can possibly really go, right? I mean, I had a feeling semiconductors probably will take over again because if you look at it, sideways move since January, and it was the strongest sideways move out of everything in the S&P 500. Like even with the Iran stuff, it didn't break down. It did not break down below this purple line. It just kept holding. It kept trying to kiss this yellow area. And then once Trump tacoed and it jumped ahead, it was like, dude, what the hell? It's just over the yellow and blue. It didn't even have to test it anymore. And probably by that time, it was too late for people to cover their shorts. I bet a lot of people were shorting the market. They were shorting semiconductors a lot. And then what happened was once it popped up here, they just had to cover. It was no choice but to cover. They were in a losing position. And once the momentum started building, then people started chasing it up and it screwed them even more. They had to really get out, and it takes time for them to unwind, right? You build up a lot of short positions over here. And then when it didn't happen, I don't know why people were so bearish. They were always bearish. It's like, dude, Trump is going to taco. I don't understand this. Every time these guys, they think Trump is not going to taco for some reason. And all they do is they short into here, which is the wrong thing to do. You got to short up here or over here. But all they did was like, ooh. They look at it and they think like it's going to break down or something for some reason. It's like, okay, I look at this and the picture looks like it's about to die, right? And I'm like, well, if it is going to die, I'd rather wait for confirmation. I'd rather wait for it to break down first. But they didn't wait, right? They just kept shorting this thing like crazy, I guess. I don't know what the hell they were. But it's like, well, nope, sorry, we're not going to do that. And I guess they kept shorting or something. It's like, dude, Trump's about to taco. Trump's about to taco. And then once it tacoed, it's over. That's like, to me, I have to wait for all these idiots and morons to stop doing that. Okay, because there's nothing we can do right now. We have to be patient. So a lot of the game is to be patient. If you don't get it at the right price, you got to wait. You really got to wait. You just can't do anything. You either follow the trend or you just wait for it to end and then wait and see what it does then, right? Because right now, like I talked about yesterday or 2 days ago, right? I did 2 streams 2 days ago and I talked about steel and all that. So we had another earnings, CMTP or something like that. What was that? Oh my god, what was it? What was it called? It's scrolling along the banner here. Blah 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 blah. So CSTM. I think that went up today at earnings in the morning, right? Yep. Okay. So it was up 6.75%. There you go. See? So just get into steel, bro. Get into aluminum. Everybody wants to chase semiconductors, but I bet you steel and aluminum are the ones that are going to keep going up. Semiconductors is probably going to get stuck and go sideways now. So tomorrow will be a big deal. So we'll see. So this thing down, up here, go down, go up. Let's see how it goes tomorrow morning. If it gaps and crap, then I'll just keep buying more shorts for semiconductors, and then pray to God that I don't get burnt by SanDisk. Pray SanDisk doesn't kill me, okay? As long as semiconductors don't go back up on the SOXX, I don't really care too much. But yeah, that's something you gotta worry about. All right. Okay, see questions. How do I feel about holding a tech bear ETF? I'm back to yeah, that's what I'm doing. I'm just holding SOXS, but you gotta get it at the right time, the right price, right? That's the problem. If you get it on the top here on Friday at the close, you're pretty safe, so you can hold it. If you have options, then it depends on your strike price and all that. You have different criteria of when you should give up on that. Okay, consider it expense without return of investment when the market is up. Then you might get surprised if the market tanks. Yeah, that's called hedging. Yeah, I mean, if you're really hedging though, you have to use options, honestly. So what you would do is like, okay, I'm long the market, but then I sell calls or I buy puts, right? So I could be have a whole bunch of semiconductor stocks, but I'll short the ETF using options. So I'll just put SOXX and protect myself when it goes down, right? That's how you do it. Yeah. That's what options are supposed to do. So that's what people use options for. And that's why like the JP Morgan, they have a collar. Okay, the JP Morgan collar. So they make you have this collar. Uh, what should I use? I should use this thing. Okay, hold on. Here, right? So people buy that ETF to protect themselves on the S&P. So the JP Morgan collar is at 68 something, right? 68.50 on S&P 500. So that's the top, and then the bottom is like 5,900 something, I think. Or did they move it lower? Maybe lower than that. I don't know, something like that. And so that's the guardrail. So they go between those two levels, okay? That's it. So that's how it is. So you could see these lines. So somewhere around this top green line and then towards this orange line down here. So the JP Morgan, if you buy that ETF, they protect you when it starts going and dropping below a certain level all the way into 6,000. So probably if you drop below 6,400 or 6,500 or 6,600, you lose less. You're still losing money, but because the puts that they bought down here protect you a little bit by shielding you from a complete loss. So as the market drops below that price, you lose less than a normal S&P 500 ETF, okay? And then when you get higher than 6,800, you get actually, you probably get very little or no profit. Like, so the protection that you have to go below a certain level stops you from making money when it goes above a certain level. Okay? So that's how they set up the options for you. All right. So it's basically like you play bowling and then you got these guardrails up. That's essentially what it is. So people who bought that ETF are probably pissed off right now because the market just blew right through it, right? They just blew right through. After the taco, it was like go, everybody's going into semiconductors, and so semiconductors going up 16%, pretty much pushed the S&P 500 higher than what it was, where it's supposed to be. That's basically it. Okay. So we went up 5%, about 5%, on essentially the semiconductors going up like an additional 20%. So 20% for semiconductors equivalent to 5% in the S&P 500, because every other sector didn't help. Pretty much stopped helping it. So there you go. Okay, collared between. She thinks we're gonna get stuck there. Yeah, that's gonna be pretty boring, right? So that's why I'm saying it's gonna be pretty boring right now. And what I'm thinking is like you have to get somewhere else. Okay, you have to start moving somewhere else. The money that people made from semiconductors here, they're itching to go somewhere else. All right, so start looking at steel, start looking at aluminum, and I'm probably gonna say the next one up is lithium and uranium. These are probably the ones that will be going up next. Okay, we'll talk about this later. So uranium, lithium. So uranium's still going down, so I'm not worried about that. But lithium looks kind of like I don't know if it's gonna crap out here or not. I'll have to wait till next week, I guess. But if they want to push lithium, they can do it here and break out. So it's a full recovery from late January. Okay, so it's pretty much shook off all the gold and silver. So remember, when silver and gold started going down again, everything else started following it. Copper, lithium, uranium. It just like sucked everything down with it. But once like we stabilized and now gold and silver are going sideways, lithium, as you can see, is ignoring what silver and gold is doing. So I'm kind of feeling like lithium is first, uranium next. Okay, so after steel, it's lithium, then uranium. Okay, I think copper is still crap because yeah, copper is still crap. Copper is still following gold and silver, and earnings also came out. So I think the copper miner earnings did not do well. So that's also bad. So there you go. Copper, ignore copper. Just focus on steel and aluminum. Then we go to lithium, and then we go to uranium. Okay, those will be the next ones. But I don't know. I don't feel like they're really gonna go that high until late June. All right, so late June, something like that. Yeah, I heard about that. Yeah, I mean there's like a ton of lithium underneath Arkansas, the Ozarks. The Ozarks have tons of lithium too. We have a lot of lithium in America. So it just depends on which stock that is going to get the contracts. So at that point, you have to look at which company are going to get contracts from Trump in the coming years. Okay, which of these companies are going to get exclusive contracts to mine from the U.S. government? That's pretty much it. Those will be the ones that will go for many, many years later. So those will be the more long-term plays. For now, we don't know anything yet. So all the lithium miners go together, but eventually some lithium miners will do better than others, of course, right? So I think, like, let's see, MP is kind of like one of those rare earth companies that are favored by the US government. Maybe they'll get a contract, and then it'll start following lithium too. Because right now they're not a lithium mining company, quote unquote, whatever. But you don't know which companies are gonna get these contracts. That's about it. Yeah. Basically, you gotta sell software into their earnings, right? Depending on which earn date. Each of them will have their own earnings date. But I think in general, most of them are late May into mid-June. So depending on I'm just selling along the path. So I don't know if these are enough dips for Oracle, if it's enough of a dip for CoreWeave. I mean, CoreWeave is not really a software company, but they stuck it in the ETF anyway. I don't know, whatever. So, and then ServiceNow, let's see, ServiceNow already reported earnings. Is it good to buy? Is it done going down? I don't know. This one is the one that already reported earnings, ServiceNow, right? So everybody else, we have to wait. Microsoft, after that, okay, I think Microsoft is doing okay. It did not really go up after earnings, but whatever. That's about it. Okay, so let me play this video, and then we'll go from there. And then I'll have to decide tonight what targets we want to make for a lot of these stocks. Because if we have a gap in crap tomorrow morning, then yeah, I guess we got to get ready for Friday. Then Friday will probably be like, okay, we'll SanDisk make another gap in crap.
Supply is coming in, then we see how there is an improvement here in selling just through the duration or just the number of bars relative to the bars down before. Low progression to the upside. There is no thrust like this. So it just suggests local exhaustion by the demand, but also the background is so strong. Even if we were to have the reaction, I would probably be thinking like very limited and then continuation, or almost like immediate continuation here. What do you think, Antal?
Yeah, we see supply coming in, and then we have the shortening of the trust, and we have supply here, right? It's analog.
There's two of me showing. Yeah, this is probably StreamYards then. Sorry guys, I think StreamYards is probably bad today. Yeah, Universal Jones has been talking about like StreamYard's been eating up more of his memory. So yeah, I think for now, yeah, I can't really do anything. If StreamYard is going to keep acting up, then yeah, we're screwed. And it's funny that the StreamYard still they haven't even fixed their bugs that they started having in January. They still have that stupid people get on panel from their mobile phone, and then they keep like their audio goes out. Like they basically can't hear half the panel when somebody goes off and on the panel. Like, so I think eventually, StreamYards really will just get worse and worse. So I don't know. Okay. Let me see. I can try to play it again, but maybe it'll just drop off.
Supply is coming in, then we see how there is an improvement here in selling just through the duration or just the number of bars relative to the bars down before. Low progression to the upside. There is no thrust like this. So it just suggests local exhaustion by the demand, But also the background is so strong. Even if we were to have the reaction, I would probably be thinking like very limited and then continuation, or almost like immediate continuation here. What do you think, Antal?
Yeah, we see supply coming in, and then of the trust, and we have supply here, right? It's analog bar. We can see how selling it's increasing, and then yesterday a no demand bar with very slight progress to the upside, right? So expected supply is came in like in a pre-market, the whole thing. Yeah, we even saw, like you said, the background is so strong, right? So here we had this test, and now it's drifting. If this holds, this stride, like this higher lows absorption, like mini training range holds, yeah, like you said, we can spend some time here and then just break and continue higher, or maybe even come and somewhere here, flush it, do this, and then we're gonna have a stride here. And
Okay, so I think
But
let's
even
look
if
at
we
this
were to
one. Let's look at this scenario here.
and we have supply,
Okay,
and then
yeah, okay, right here.
immediate continuation here. What do you think? Even if we were to have the reaction, I would probably be thinking like very limited and then
Yeah, I'm thinking it's gonna be like this, right? We try to retest the where the S&P got stuck, right there, a little bit like that. So we're gonna consolidate a little bit. So I'm gonna have to see how long these semiconductors are gonna goof off in this little sector. Okay, so let's see. Okay, all right. So let's look at where we're at. So I think aftermarket looks like SOXX is about going up like 1.23%. We were already 2.57% up today. Okay, see, AMD is going an additional 3%. Broadcom, AVGO, 2.21%. KLAC reported earnings down 7.61%. Okay, Intel going up additional 4.21%. Qualcomm 13.49%. Marvell up 2.29%. So you gotta look at Qualcomm. Okay, is trying to hold up everybody else. Okay, KLAC. So that's dealing with manufacturing. All right. So ASML, KLAC, LRCX, AMAT, all those four, okay, they're a big portion of the SOXX. But, all right, they kind of can get ignored as long as they keep pushing up Intel, STM, all that. I think NXPI and Texas Instruments, TXN, they're done. They're pretty much done. I don't think that people can push them up. We'll have to see how Qualcomm does. But Qualcomm could be a gap and crap. I don't know. Usually I do see gap and crap. So that's it. Yeah, Lumentum's not part of semiconductors, though. Lumentum is outside of that. They're extraneous. So let me see. Okay. Screen. Okay. So let's see. So here's where software is right now. Okay. So it looks fine. Once this thing, the purple 18 goes above the 40 on the daily chart here, we're ready to continue on moving up. So I'll be watching this. We don't get a big dip on Monday, Tuesday, or nothing happens on Friday for sure, maybe, and then that's it. We're just going to keep on going up. So that's when you just go load everything up on Oracle, Palantir, all these other ones, because WebL is only a portion of these things. Okay, WebL is communications. That follows WebL doesn't really follow IGV. Okay, that follows FDN. FDN has all like Amazon, Meta, Netflix, okay, Google, and all those already reported. They're already done reporting, and it's already above this red area. It didn't even go down that much, you know, comparatively to IGV. It's already kind of recovered. So I don't really know how far WebL has to go, and I rather be doing IGV type stocks. So that means the higher risk ones, right? So that means the Palantir, okay, the Oracle, the AppLovin. You got the Adobe for sure, right? So those will be more interesting. Oh yeah, and the cybersecurity ones are the ones that have done the best. They're the ones that actually, you know, stayed above the range here. Everybody else kind of fell back, but Palo Alto Networks and CrowdStrike, right? CrowdStrike. Yeah, CrowdStrike. Yeah, CrowdStrike. Yeah, those two. Those might actually be doing a lot better. Yeah. Yeah, I don't know if they're gonna how much more they're gonna go up, honestly. Yeah, AIBU maybe, but AIBU has some semiconductors in it too. So I don't know. I don't know how much higher they're gonna go. WebL maybe that's done. So I'd rather be playing more like the other ones, like Hut, you know, and those guys. So I'm just gonna ignore that because that semiconductor money wants to go somewhere else. They want to make money somewhere else, and I just don't know if like okay, Google or reported, Amazon or reported, Meta or reported. Like we'll know by tomorrow if it looks like they want to go up anymore or they're done. They're kind of done this quarter, and nobody wants to do it, right? So yeah. Others went down. Yep, that's right. That's why it's hard. That's why the game is hard. Most people can't go around in circles and go like pick this one. This one's going up. Like if you did steel, right? Jump back into steel, it did a lot better than copper. Most people would just buy the whole basket of materials. So they'll buy fertilizer, they'll buy steel, they'll buy chemicals, they'll buy everything in the material sector. XLB, right? XLB. So that has everything in it. So and nickel and other palladium, right? Gold and silver too. So XLB, right? XLB. But you see, like XLB from April 13th has been going sideways because, like you say, some things go up, the other things go down. So you go flat. That's really annoying. Like you had 2 weeks and you could have been anywhere else that might have went up, right? And if you, instead of buying XLB, you broke it down into copper, steel, uranium, lithium, right? You would have noticed that like, I should have been in steel stocks. But let's look at the steel ETF. The steel ETF from April 13th, yeah, it went up for like 1 week, but the second week that it just went sideways. So some steel stocks are going up and some steel stocks are starting to go down. So if I pick the right steel stock, Nucor was the right one, this would have kept going up for you. If I pick the wrong one, if I pick CLF, this one just went sideways pretty much. So yeah, it's like you start getting into the nitpicking here, right? Semiconductors, the way people have been pumping it have been very deliberate. When one side went down, they extra pumped, right? Semiconductors is the manufacturing, it's the fabless, okay? It's the fabbed, it's analog, it's digital, it's memory. It's like there's so many kinds of semiconductors. And the way they've been doing it is like when one area was weak, they made it up by pumping the other area. And they've been doing this for the past month. Okay, they've been doing this for the past month, man. So that is crazy, right? crazy. So that's it. But yeah, I've been saying like like let's look at one aluminum. Look at this aluminum. So this one I was looking at since the beginning of the year. I said like maybe I'll pick this one for the boomer portfolio. But if you see it, it's gone sideways. This aluminum stock really sucks. Even though it's the largest aluminum company, okay, Alcoa. You get your Reynolds wrap is probably coming from Alcoa. It just doesn't have that oomph to go up. If you look at the smaller, mid-sized, and small cap type aluminum companies, they're doing a lot better. Kaiser, see this one? This actually broke out. So, yeah, some material sectors are doing fine. Okay, some are not doing fine, and that causes everything to go sideways. All right, this is painful. This is really painful. If you want to beat the S&P 500, you got to continuously keep rotating around and around and around, go back and forth and doing this. And that's not easy. That's not an easy job. I don't like that. I rather wait for a big dip and then I buy and I hold for many months and then I sell. That's what I thought oil was going to do that. But apparently we got into a war. And then now it's kind of like, shoot, we have to keep dancing. Like, oh, okay, oil is hot now. Now it's steel and aluminum. Then next will be lithium and uranium. And then we have to decide this and that. We have to go back and forth dancing. Like this is where the money is made. And that's why people pay people to do this. Right? That's it. Yeah, Korea makes sense. Samsung is the biggest shipbuilder in the I think in the world. Like Korea builds the biggest ships right now. So it makes sense. Korea is very good at steel. Did you see Nigerian video where that guy was complaining that Nigeria has the most iron mines, but they can't make steel? Like all the iron that they mine out of the earth, they ship it to Korea to make steel. So Koreans are the best steel makers right now. So it makes sense that you'll just build ships there. Might as well. You're going to be next to the steel, right? It saves on costs because then you don't have to pay money to transport the steel over somewhere else. Probably because of tariffs too. Probably like Trump put tariffs on steel, and because now steel is so expensive, now you have to build the ships near where the steel is being made to avoid tariffs. So, that's news to you. There you go. You gotta study your supply chains, guys. I think a lot of you guys who argue about politics don't understand real politics because you don't understand the supply chain. If you looked at the supply chain, then you understand like, oh, that's why there's a lot of immigrants in Ohio. Oh, that's why there's a lot of Hyundai has a lot of factories in Ohio. Okay. They need a lot of cheap labor. So of course they're going to get Haitians over there. All right. And then Intel, they're being forced by the government to build more factories. They open new factories in Ohio. Ohio is probably giving a lot of tax incentives to build factories there. So that's why certain states are getting certain influxes of immigration. So if you follow the supply chain, then you understand, and then Anduril is a drone company made by a former executive of Facebook. They're also opening factories in Ohio. So Peter Thiel is involved, right? Peter Thiel, Elon Musk, all these people are going. So if you look at where things are going, that's why all the H-1Bs, you see they coming in Texas, because Texas, all the tech companies want to build offices in Texas for the tax benefits, and then dump all the Indians over there. And that's why everybody's complaining about, oh man, there's all these Hindu statues everywhere in Texas. Well, no shit. That's what's happening. Anyhow, Teradyne. Okay, Teradyne report earnings, so it crapped out, right? So it looks like that's the end of Teradyne. That's why I don't play earnings. I wait for what earnings do, and then we see how it goes. All right, so this is Teradyne. We're right back into this range. So everything that we got from last earnings, February, went up, went down, went up, went down, went up, and went back down here. So this is the fair price for now for Teradyne. So then we have to look at the larger. We have to look at the larger trend. The larger trend for Teradyne from $72 last April up here is still intact. So the moving averages 18 and 40, right, for Teradyne is still intact for the weekly. However, this bar right now is very large. Very large. I highly doubt that it's just going to recover and keep going up. This most likely is the beginning of a range. Okay, what's probably going to happen is that we're just going to get stuck here for a while before we can continue on up. So we'll probably have to wait for next quarter for that to happen. So I'm not going to be in a rush to be like, yeah, I'm going to buy it again here. No, that's probably not going to happen. So let me see, blah, blah, blah. Just use this thing, right? So let's say here, let's just draw this, something like this, right? That makes sense. As long as it holds this level, okay? It could be that we could go down lower. That's possible. Okay, so yeah, maybe we go up a little bit, but then we just start going down lower here, and we make a range at a lower level. So for now, maybe it'll just do this, but then we'll have to wait. So I think this one's done. This one's done. That candle is too big. I don't think by Friday this is going to recover that much beyond half of this level. So at best, it's going to go back up to 354, but I think that's it. Next week, if semiconductors goes down further, then this will follow it, and we can see it go down towards this lower level here, probably at 240. Okay, so I think this one's done. Let's look at air. Okay, air after earnings is a lot better. All right, but this one doesn't have a trend. That's the problem with air. Air, I've been waiting for it to retest 26 here, and then break out of 40. So once we see this completed, we should start a new trend of this going up. And this is probably going to be in October, okay? Because I don't think it can run right now. I think it's going to have to retest. So if you look at air and Teradyne, yeah, that's probably the same thing. We have to see where the ranges are. We have to see where the new ranges are, and then we could decide. But for now, I think we're done. We're completed. Just started my trading view basic account to discover the numbers are on a 15-minute time delay. Oh, they did that? Oh, too bad. When trading view was free, I got everything. Yeah, they'll do that. It's a software company, right? There you go. If you're a software company, you do that. I mean, if you got to think or swim, you just use that one. If you use that brokerage, they take away features. That's how they make money. It's like StreamYards. They take away the features, they make everything more shitty, and then they make you pay for more for the same. So they can't make money unless you pay for like upgraded features. That's basically it. Okay. All right, let's look back at the semiconductors here. All right. Okay, so this is the range we're at. All right, so let's look at the Qualcomm. So Qualcomm. All right, let me look at the daily. So Qualcomm, when it pumped on the Intel stuff, right? I think up on Intel. You see, it makes this range right now. Okay, let me see. Let's get this. Okay. So something like this, 161 to 140. Okay, so after hours, I think it's above 160, right? It's after 160. So let's see. Let me check. So after hours, it's up 13.5%. So yeah, I think it's about 164, right? It's probably about 164 from today's close. So a bit higher than that. So what I want to see, if you want to short semiconductor, watch what Qualcomm does. Okay. Qualcomm should give you an idea of what it might be. Let's say it opens up here, right? 160 something. And then it craps out. It just goes straight down. All right. If it goes straight down, if it goes back in this range, see what happens when it goes into Friday. So I don't know if this will go into Friday like this. Like that's pretty fast, but it could be that quick. You know, it could be. We could complete this move by Friday. If you see that by Friday, then next week we should keep going down. Okay, so start looking at all these semiconductor stocks. Look at them very carefully. Look at how they behave. Okay, if they start gapping and crapping, you know, if they can't hold in the morning, just look at each one of them. Yeah, in the morning, you'll see. You'll see. Like you should start seeing more of this kind of action here. Right? In the morning, it's red within the first hour. Within the first hour, it can't hold it up. It can't hold it up. It just goes down. So Qualcomm, if you look during the Intel one, you see that? Like a lot of people were doing something here, a lot of volume here. Were they buyers or were they sellers? We'll find out. If after earnings in the morning, it just goes up here and then it just fades, it just goes right back down. That tells you then you can short it. Okay, you can short it for sure. That means semiconductors look really ready to short because look at ASML. This has been weak. ASML has been weak. CLAC is going to be down if it's going to hold that. I saw it like down 7%, 13%. So see how that goes in the morning. If a lot of these start turning downwards, then yeah, it should be easy to push it down. Okay. AMD will be the one reporting on Tuesday, right? Tuesday or Wednesday. I don't know. One of those. So this one will be your only hope at that point. But that's after SanDisk. You gotta wait for SanDisk first. Sorry, guys. You gotta wait for SanDisk. I don't know what's gonna happen with SanDisk on Friday. So after it reports earnings on Thursday, then you'll know. But you have to watch for all of those. Okay. All right. Let me look at oil. So let's revisit oil. Pretty good recovery so far. Okay. All right. So I think we're building a range now. We're building a range. So between 160. So this dashed line here up there. This was already predetermined way back when. This was set back in 2022 and the green one back in 2018. So you can see we went right up there and then we went down and we went back up. So now this area here is your range. This is your range, okay? Right here. Okay, something like that. Okay. Once you're in a range, you have to see, how long are you going to stay in this range? Are you just going to go back up and then continue up? I don't think so. I think we're just going to be stuck here in through till July. And that's what I'm waiting for. So July is the time. I don't waste my time with ranges. I don't waste my time with ranges. I just waste my time with the damn trends. Okay. All right. Okay, is it possible to export ticker lists? You make them and link them, upload them? I think so. I think. Yeah, I think so. Can you? I think you can. Can you? Upload list. I can upload a list. Okay, so I might not be able to export, but I can give you a list because all it is just a list. You just have like comma separated text file. That's it. That's all you do. I don't know if you can like make a copy is not gonna do that, huh? Nope. No. I think that's it. Yeah, you can't do nothing. Yeah, you can only chart the download the chart. Yeah. Yeah, you can't do nothing. Yeah, you can only upload a list, and that's just like a comma or text file, comma separated file. Yeah, that's it. And that's so all you got. Yeah, I could just give you like a bunch of like comma separated files. That's all you can do. Yeah. I remember someone said they could like X or like I don't know. Holy shit. Like you think you could share it or something. Yeah, you can share a list. So if you have an account, I guess I could share that way. I could just share it. Yeah, I can't export it into a file. So I could just, as long as you have an account, yeah, you could just share it. Yeah, yeah, I could do that. Yeah. Let's see. I used to have a top tiers and I could see one canceled. Then I got it. I feel the upgrade. So I can use a few basic indicators. Oh, they block you on indicators now. Like I remember the limit was like 3 indicators you could put up or something. I don't know. It's just like I don't really need to pay for TradingView. I mean, I just use TradingView because it's like it's just something I have, but like I don't need to pay for it. Every time Christmas comes around, there's a discount, and it's just like 100 something bucks after like 80% discount. Then I just whatever, I'll just renew it again. As long as they keep doing that. If they stop doing that, I ain't doing this no more. I ain't using it anymore. So yeah. Yeah, share list. I mean, that's kind of like annoying because like you could just export a comma separated file because then you could give it to somebody who doesn't use TradingView, you make it convenient for them. It's like I could give a comma separated value and I could just give it to you and you could upload it to another charting platform. Every charting platform can just upload a freaking list of tickers. That's it. Yeah. It's like really stupid for them not to have that. But I could see like they don't want you to like help other people on other platforms, I suppose, if that's their gimmick. But yeah, that's it. Yeah, that's stupid to pay for that. I don't know. I just got like once I started paying for them way back when, it's just like every time Christmas comes around, okay, it's just like 100, 200 bucks, whatever. Like 200 bucks over 1 year is like nothing in my point of view. I mean, I know it's like, dude, it's 200 bucks, right? Somebody else might be like, dude, that's stupid. Why would you pay? Yeah, I know. But compared to all the other subscriptions you probably pay for, the utility bills and stuff, it's like 200 bucks is like probably like 5 Starbucks coffees in like a week or something. Yeah, it's the age of nickel and diming. They got used to it. People are so used to like, it's just like the YouTube subscription. Yeah, I get it. It's just like $9 a month, $5 a month so that you don't get ads. But like, why don't you just download a browser that has ad blocking? Why do you pay like $9 to Google? It's like principle of the thing. It's like, dude, I don't want to pay Google another, like I already give money through super chats. Why do I need to give some more money on that? It's like if every nickel and dime adds up, if you, so you have to vote with your wallet. I get it. Yeah. Rent is due every minute. Yeah. Rent is due every minute. Yeah. So yeah, it doesn't make sense for a lot of people to be doing this stuff. Yeah. So I think the only thing about TradingView that's really nice to have is that like there's a community of people that have indicators, and if they open their source code for you, you can take their source code and make your own indicator. You know what I mean? So that's kind of like the the benefit I see of having TradingView is like you share stuff with an open community. I know people have code for like Thinkorswim, but Thinkorswim is closed off to people who actually use a Charles Schwab, right? If you don't have Charles Schwab, you're not in the group. So TradingView is like doesn't care about what broker you use, so it's kind of open. And since a lot of people start using it, you have a community. I think what you're doing is you're paying for the community. So if you have like an indicator you can make on your own. So let's say you have like, let's say you have an indicator, like you can find people that make indicators, right? And you go like, oh, I like that indicator. And then I take that guy's indicator and then I can take their code right here. See, so I can get that indicator, all right, like decision point, whatever. And I can just copy paste their code and modify it for my own thing right here. See, I can just take this code and then I can modify it. I think that's the benefit of having TradingView. Otherwise, I don't see the benefit really of using TradingView if you're not taking advantage of that. Yeah, I think the mark they started putting some of their indicators for subscription only. So if you don't want to pay for the whole DeMark suite, you can pay by indicator, bit by bit. Yeah, probably. Yeah, I know ChatGPT can already make code like long ago, so I'm sure people are using ChatGPT to make their. I haven't looked into it though since I stopped using. Nowadays I don't use that many indicators, if any at all. I don't even look at them too much nowadays. Uh, it's just like not necessary. I used to be big on making indicators, but now it's just like nah. Yeah, I just don't care. Like, because once you see like the Wyckoff stuff, things, you just look at the bars. You're like, oh, I see big bars. I see big red bars here, here, and here. Now I know something is changing. They're bigger than these bars here, right? Then I don't need to look at the ADX anymore. So like, let's say I look at the ADX, I'll stop looking at it. Because like the ADX will just tell you like, whoa, there's a lot of red bars coming through or something, but you already see the red bars. So it's yeah, the value of it kind of disappears. So let me look at this one. Okay. So yeah, I see a trend. I see the 18 going up with the 40. Obviously the MACD is going to be up. No shit. If I look at the ADX, I see the red and the green, right? And then if you look here, you see two red bars here together. The first time that you had two red bars on the 78-minute chart together, back to back. They're kind of like the largest two red bars since this one from the taco. Okay, and if you ignore the taco red bar, then it's as large as the one from April 1st. And then from there, there's no red bar that was larger than March 30th. Fast forward to here, you see this red bar, right, on Monday. And something's changing now for sure. All right, something is really changing. Okay, so that's as large as this red bar this morning over there, that morning on March 30th at the bottom. So yeah, you don't need to look at the rising red DX. You already see it here. You're like, okay, I see it. Like, of course, the red DX is going to go. So by that time, you don't really need to look at the indicators. All the indicators are doing are confirming what you can see with just looking at candlesticks or bars. These bars already tell you the story. You don't really need to look at them. Your eyes are already starting to get accustomed to like, oh, there's a trend. Oh, it's going sideways. Oh, it's going sideways again. Now it's a trend. That's why that Wyckoff guy was talking like that. So indicators are only like for you as a beginner to kind of pay attention to certain things, but over time you should just look at the candlesticks. I don't even need to see this stuff, right? I don't need to see any of this anymore. Like, so hide all. I can just look at a bear chart like this and tell you what's up. I see a change. There's a change. Okay. Right. I see this red bar here. There's going to be a change. There's more of a change. Okay. We're going sideways now. That's it. That's it. That's all I got to look at. And then that's all I got to look at. Like you can see there's a trend, right? It's like going in a straight line. I don't need to draw the line. I'm just like, yeah, okay. Yeah, but I don't need to do that anymore. It's just like so it helps you to see. That's basically it. So you try to remove as much as you can. You don't want too much noise. Yeah, it's like this is as much as you need is like, oh, okay. So if you do the Joe Rabel way, right? You do the Joe Rabel. Okay, let me get rid of the volume here. Let me get rid of the volume. Okay, and we just focus in on this. Like the two moving averages here. Okay, let me get rid of these other ones. Let me see. Can I get rid of that? Let me see. Maybe I can't. Maybe I can't. I don't know. Let's see. Visibility. Nope, that's not gonna work. Oh, okay. I can get rid of this. All right, good. All right, I programmed that in. Okay, so good. I put that in the code. All right, so you look at two moving averages, right? Okay, that's it. Joe Rabel would say like, wait for the purple to start curling up. All right. And then you have the first move up here, right? You got the first move up here, big strong one. And then you opened at the bottom here at the purple. And then it went up within an hour. And you're like, whoop, okay, that's good. I would buy here, right? I would start buying here. That's one place to buy. I would ignore this move. I would be like, I have to wait. I can't buy when it's going down because I need confirmation. So that's the problem with the Joe Rabel way, right? The Joe Rabel way would be like, I have to wait for this to go up first and then wait for a pullback, then I buy. Okay. The other way is like, I'm going to be more conservative. Not only am I going to wait for the first move up that goes above the two moving averages, I am going to wait for the first confirmation down here to go up. And then I wait for the crossover. I wait for the purple to get above the yellow. And then when it gets close to the purple, I buy. All right. But then, for the most part, you missed out on a good portion of the gains here, right? If you bought software and waited for that to happen, because you remember, I told you guys to buy on Monday when it looked bad. I said, buy Monday, my Monday. It looked horrible. Everybody was bearish. Everybody was bearish. Now everybody over here is bullish, right? So if you wait for the confirmation, you missed out on maybe 10, 15% of the gains for software over here. If you bought semiconductors, there's no problem. You could wait. There's no problem. You could have bought here and you've been fine. But for software, you missed out on a good chunk by not buying on Monday. Okay, Monday was the time to buy. And there were other reasons to buy it on Monday. That's not going to be shown up here. You can't see that with the moving average. The moving average, the MACD, all that stuff comes too late. It's lagging. The indicators lag. Right? So that's kind of the problem with it. That's why I have to use other things. I can't be using that. But you can do that. It's fine. It's okay. And even if you're late, when you see the moving averages this far apart, like this is a strong trend. Compare that to compare that to the software like IGV. Look at this. This is ugly. Look how ugly this is. This was after the Monday, right? Monday was like going into Monday, like what, here or something? Like, man, this was so ugly. Oh my God. Like I can't even tell when the Monday was. like it's not a clear drop, right? It goes up, but it's stuck right away. It's not like software. I mean, semiconductors. And then when you got the Taco Tuesday, it went right back down to it's ugly. This is ugly. This is ugly. So getting in on over here to go first move up, yeah. So that's the hard part. I think that's the hard part. You could tell right away like the trend is going to be weaker. You see, like you look at the candles here. There's a lot of red candles. A lot of red. Like you look at the software, it doesn't have that look. It doesn't have that look at all. It's very clean. Very clean. The green bars overtake the red ones. Every time there's a red one, there's a green one that overtakes it until Monday. Monday is the first time we've ever seen like a big red bar. Once you see that, then you know there's a character change. That's what it is. That's all it is. Yeah. Because it's faster. Yeah, you're gonna have to use something else. Yeah, you're gonna have to try some other stuff. But if you use DeMark, that's the best. DeMark, the reason DeMark did what he did was because I want to call the exact top and the exact bottoms. I don't want to miss out. Okay, that's the whole point of doing that. So, yep. So that's the problem. And then I use the cycle stuff too, right? The cycle stuff said like, oh, April is going to be great. So the bottom was like close to April. And then I said like, yeah, just do it. Yeah, that's the problem. Anyhow, yeah, we got to wait for this. All right. I think you got the idea. You got kind of the idea of what's going on. Let me get through some of the other stuff here. Let me see. Okay. So let me get through the rest. Okay, so this is the Iran Hut. Okay, so this is after hours. Korea after hours, a 3x leverage, 4.48. Okay, KORU. So it's following the semiconductors. Hut, Iran, Core Z, they're all following. Okay, you see MSTR not up as much because it follows Bitcoin only. The other ones don't need Bitcoin to go up. So Bitcoin could still be weak, but Hut, Iran, Core Z might be ready to go tomorrow. I don't know. We'll have to see in the morning. So I might show up early in the morning, tell you how I feel, but maybe that's too premature. But I think within an hour, you should know what's going on. After that, I'm looking at APLD, okay, and then Moderna mRNX. We'll cover that some other time. Okay, so cloud software. All right, so IGV, ignore AI. So we're just gonna look at Palantir right here. So let's see, Palantir up 0.4. So it looks like nothing. Like Oracle 0.6, Microsoft negative 0.27. See, so Microsoft earnings kind of like didn't do anything. So most of these guys, they're pretty much flat, right? So the rest of them pretty flat. So software, no clue tomorrow what's going to happen. Communication services, well, Amazon did well. Meta, negative 7%. ANET, so Arista Networks, I guess, is following it. Google is the one that saved it. But overall, up 7%. But overall, it's like flat. So WebL is probably not going to do much tomorrow either, unless Google powers through and forces everyone up. So CoreWeave, it's got that open AI stuff. I don't know, drama. It popped up like back and recovered. It went up 8%. It has a high beta, right? So I think Akama, right? AKAM and FSLY, Fastly, both of them got Anthropic was the one that killed this one. So I don't know. It looks like it's recovering. So it's hard to tell. I think this one still hard to tell with that one. Okay, so let's look at the optical stuff. So this is outside the semiconductors, okay, with Lumentum, Sienna, Coherent, AOI. So the top four. So this one, they're going up again because I'm guessing Google said good things about data center spending. So Lumentum, Sienna, Coherent, and AOI. So we'll have to watch AOI. Actually, let me look at the chart for AOI. Let's see what AOI is. I don't know if I should recommend this one. So let's look at the volume profile. I don't know. So should I recommend this one? So it's been going sideways. All right. Since April 9th. Okay, how about this? Let me go from earnings. How about this one? It's pretty volatile, though. Like you're gonna have to withstand like it going up and down like crazy. Hmm. So the last high was in 2017. This was when I played with this stock. Was here. After that, I didn't really think about getting back in because it looked too much. It's too much of a penny stock. You see the way it moves, like that's why I don't like. I'm not gonna tell people to get into this, but if tomorrow this thing really holds up here, if it stays above 130, you know what? This thing could still go up, man. But let's see. When's earnings? Friday? Okay, Thursday next week. You could trade it until next week. If this thing actually goes up, maybe it could go up to like 200 something. I don't know. This thing's crazy. I don't know. I don't think I want to recommend that. Let's see, Lumentum next week. Where is it? Tuesday. Okay, Tuesday. So a lot of the optical ones are going to be next week, right? Okay, this one, June, maybe June. Coherent, May. Okay, 6th. All right. So a lot of them are going to be reporting next week. Okay. You have time to play this? I don't know. I don't know how much time you have to play it. Yeah. I don't think anybody asked for Spotify. It's just something I follow. Because like it's one of those stocks that used to be great and then now suck. So I mean, you could just look at this. Look at the weekly pattern here. The way it's moving. Like this thing already died out in June. You see that? That's pretty bad. That's a pretty bad downtrend. 1, 2, 3, 4, 5 weeks going down. Then you go sideways for a bit. And then September, you go again 1, 2, 3, 4 weeks down. And then now you're below the yellow. And you're pretty much at that point, you're going to go down, down, down. But eventually, at some point, it's going to recover. It's going to have to zig back up before it zigs back down. So a stock like that is going to be good for that reason. So SoFi, somebody asked about SoFi, actually. SoFi. Yeah, it reported earnings. This week is down 15. Nope. So it went right back up here to the purple. And now it's just going to go down lower, I guess. So this one looks bad. So Lending Club. This one looks better. If I had to buy some kind of like credit, financial, some kind of thing like that, this one will look better. Yeah, this one will look better. But yeah, SoFi looks dead. SoFi looks dead. Chart wise. Yeah. So this one, that's not a good look. That's not a good look. So you could tell right away, right? So a lot of like Reddit should report earnings pretty soon next week. I mean, tomorrow, something like that. Yeah, Thursday after the close. You see this? If it reports earnings and it goes down, it's going to go down to 103. That's the next place, and then 76. That's it. It's over because you had 1, 2, 3 chances to try to break out. You failed. If it fails this time, it's going to go back down to the bottom of the range. Right there. That's where it's going to be. So that's it for that. Okay. All right, back to the things. Share screen. Okay, back to the things. All right, back here. Okay, Teradyne, we talked about. Air, we talked about. So next up is Micron, SanDisk, and Western Digital. Seagate already reported. SDX already reported. We already got up 11%. All right, so we have to wait. for the other ones. Micron will report way late, way late, 2 more months. So SanDisk and Western Digital WDC will report tomorrow after the close. All right, fertilizer and grains and agriculture. So till, I think sugar went up. So sugar has been recovering. So that's helping out till. So I told you 2 days ago, right? I said like till probably you can buy now. That's fine. And then the next one is CF and IPI. Okay, so those two you probably okay. You want to buy fertilizer now? Go ahead, buy those two, CF and IPI. The rest of them I'll have to wait and see. I don't know. FMC went up 5.87 after hours. Maybe reported earnings. I'll have to look at that one. Okay, so this meme here, defensive sectors are now a novelty allocation. Okay, why did the guy make this meme? Because everybody now is in semiconductors. Semiconductor influence is now 16.1% of the S&P 500. Energy, so that means oil, natural gas, healthcare. So, you know, all the pharmaceuticals and drug companies, staples meaning like Dollar Tree, Dollar General, Walmart, and utilities. Of course, you probably have a utility company that you like, I don't know, near you. And so all those are now down to 19.2% influence of the S&P 500. So during the great financial crisis, the defensive sectors used to make above 45% of the S&P 500, right? And now we flipped. So now semiconductors are now getting more and more influential. So there you go. People don't want these things. So I think we've gotten way overboard on semiconductors, and that's why we're gonna look at oil, right? Natural gas, those things in July. So, and healthcare. So I think some healthcare stocks will be coming up, as well as utility stocks. So over the past 15 years, analysts have typically revised EPS estimates down by about 2% between January and April. This year is a notable exception, with analysts raising forecasts for all 4 quarters of 2026. So that will tell you why the semiconductors are going up, because I think all these guys at Goldman Sachs and JP Morgan, they've been kind of like hyping everything up and upgrading all their forecasts for AI in semiconductors. And so this is why once that whole taco trade happened, everybody ran back into semiconductors, because those assholes were raising the estimates for how high those semiconductors could go. So yeah, I think most of this is semiconductors. All right. It's not in anything else. Okay. It's just semiconductors. That's really what happened here. So that'll tell you why that happened. Okay. Okay. So I already explained this one, right? I already explained that one. Good. So we're done with that. Okay. Do I need to talk about this? No, I think I'm going to just talk about lithium. Okay. Uranium, we're going to have to look at. Okay. Yeah, we're going to have to look at this one. This is uranium cycles. Gonna have to see if this is gonna go up into July. All right, gonna have to watch this one. Let's see. This one, I think this one is just like the NASDAQ. So if this thing is gonna go sideways till down, it's gonna complete its move into May 18th. So that's what I'm gonna be looking for. This is gold. So gold here is at a bottom right now. We're at a bottom. Okay. Gold should go back up into June, maybe. So you could buy GDXU today, tomorrow. Maybe that's the best time, and you'll be fine. All right. Okay. Anyhow. Okay. This is another one here I got here. So I took this and I put this on my Twitter. Basically, this is high beta divided by low volatility. Okay. So this is high beta stocks over low volatility. So right now we're on a leg 1. So Elliott wave 1. So I think you should be patient in the coming week or two and see if there's a dip. That's good. So I wouldn't be rushing into buying anything unless it's like some software that looks crappy that you can buy up. But outside of software or HUT or anything else, just stay away. Okay. So unless like you see something really good tomorrow morning, I'm staying away in general and be more patient until next week because I want to see if this thing completes its move down. Because if we're gonna make a number 2 here, it's gonna be somewhere next week. Okay, so sometime maybe I think I targeted around May 5th to 6th, but I could wait until May 8th. I don't know, Friday. Yeah. All right. So this last bit here, this is like the materials. So I was talking about like the material sector. So there is going to be some big bottom in January, I think. All right. So I wouldn't be in a big rush to buy any kind of material. So I just showed you steel and aluminum, and then maybe we'll go into lithium next. But outside of that, like I'm going to be more patient about uranium and copper, gold, silver. Like I think we're just going to go sideways till down until like December. Okay, for that one. I have another one here where it projects it to be November, like elections, so the midterm elections. Okay, so yeah, there I see some prognostications, and then if we look at the daily one, if we look at a more short term, it's July. So from July, so the back half, the second half of 2026, I think you got to be kind of like selective. Okay, when do I buy it? When do I buy it? Okay, I'll buy it sometime in July. So this is the next point. Gold overall on the weekly chart with a weekly cycle, gold will have its bottom in July of 2027. Okay, compared to wheat. So I think you'd rather be buying bread than buying gold into 2027. So I think we might have to stay going sideways for quite a while. All right, because if wheat is going up, then gold is probably not going anywhere because wheat is already starting to go up. All right, that's it, guys. I think I'm done. Okay, so if you guys didn't know, we got some drama with Jeremy. Jeremy's laptop is now being held hostage by the Thorpes. The Thorpes have taken the laptop and are going to hide it somewhere. And they're going to make Jeremy go look for it like a scavenger hunt, Easter egg hunt, whatever. So that's what is going to happen. Yeah, JP Morgan, that predicted 60% oil. Yeah, JP Morgan, that's it. That's what they do. They manipulate the markets. So that's what they do. Okay, so let me tell you about the other couple earnings here. General Dynamics went up 7.99%. So I think it's doing a lot better than Lockheed Martin. So I might be looking at some stocks like this to add in. But we have Bloom Energy up 27%. So the AI is working out for Bloom Energy though. So this is looking fine. So some things are looking fine. Some other ones have not been looking fine, right? Celestica dropped, but it recovered today 4%. Okay, so we'll have to revisit this by the end of the week and see which ones of these are going good. But as you can see, Teradyne down, SoFi down, GE Healthcare down. Okay, so healthcare out, financial with SoFi out. Maybe Lending Club might be the one that I will say, okay, maybe it's the only company that's worth buying in the financial credit sector, consumer credit sector. Okay, Enphase down. So that means residential, battery, storage, solar is still not doing well. So nope, I guess we're going to have to X that out. So it looked like it might have made a bottom, but maybe not. So forget it. Okay, so focus in on the steel and aluminum for now, and that's it. Caterpillar will report tomorrow in the morning, so I'll be watching that one. CAT. Okay, yeah, and there was like I think We're gonna have some Phillips 66, right? Okay, Phillips 66. I gotta watch how that responds tomorrow. So we're gonna have some energy stocks coming through: Valero, Phillips 66, and then Chevron, and I think Exxon, right? Exxon reports. I think so. Yeah, Exxon. Yeah, Friday. Okay. All right. And I'll give you this last quote here. The late Mike Epstein. So I don't think he's related to the infamous Epstein here, but who knows? Had a similar vision of this same point. So this is from Paul Tudor Jones. I see the younger generation hampered by the need to understand and rationalize why something should go up or down. Usually, by the time that's become self evident, the move is already over. When I got into the business, there was so little information on fundamentals, and what little information one could get was largely imperfect. We learned just to go with the chart. Why work when Mr. Market can do it for you? These days, there are many more deep intellectuals in the business, and that, coupled with the explosion of information on the internet, creates the illusion that there is an explanation for everything, and that the primary task is simply to find that explanation. As a result, technical analysis is at the bottom of the study list for many of the younger generation, particularly since the skill often requires them to close their eyes and trust the price action. The pain of gain is just too overwhelming for us, all of us, to beat. Okay, so this is why I never talk too much about the news, right? I don't care about why. Like, even they don't know if the UAE getting out of OPEC is a good thing or a bad thing for oil. Is it a good thing or bad thing for gold and the petrodollar? What does that mean? Okay, so what is it, right? So then we have another way of explaining it. Epstein was a NYSE floor trader, New York Stock Exchange, and before that, he was a Navy SEAL. Oh, wow, a Navy SEAL. Okay, before SEALs were even a thing, and he was former president of the Market Technicians Association. So that's where all the technical analysis guys have their little club. Okay, Epstein was writing on the subject of figuring out why prices behave as they do. Okay, let me zoom in. Okay, this is one of the most important points I've ever had to learn. Oh, well, I added the ever. For me, at least, why is the most expensive and least valuable information? Okay, why? The why in single quotes here, okay, is the most expensive and least valuable information. When you get why wrong and act accordingly, you lose lots of money. You only can know why for sure after the fact when it is useless, right? So we already know we're at war. Oil has already went up. When I told you to buy oil, it was before the news, right? I didn't know why I saw so many things say oil was bullish. But by the time people realized why people were buying up oil before the event happened, it was kind of too late, right? There wasn't really much more it could go. We got in way early. Okay, so you got to learn to live with the reality that are, and the market knows, things that are beyond the individual use can. Ken. Okay, look that up. The search for why, whether right or wrong, can just as easily lead you into irrelevancies, or worst yet, to valid data that will not impact on the market. The best analog is arguing with your wife. Being right is often totally valueless, if not counterproductive. So that's my philosophy too. I don't care about why. I just care about buying at a certain price and getting out at a certain price. So that's kind of like when you look at the cycles too, like maybe these cycles here are because sun, the moon, Mars, Venus, people's like moods that change cycles of empires, cycles of business, cycles of credit. I don't know. But something is happening that causes these sine waves to keep on appearing at certain periodicities. And I don't really care why. As long as I know where the bottom is and the top is, I'll keep using it. That's kind of the goal. That's kind of the goal. Okay, guys? So that's it. That's kind of where I'm trying to get you at. I don't think we can know why people want to buy semiconductors now. Is it because of AI? Is it because of earnings? Is it because JP Morgan changed where things are? Okay, JP Morgan also said, like, yeah, it was $60 for oil for the rest of the year. Now they're saying like data centers are going to grow like trees and we're going to need thousands upon thousands of chips. I don't know. Really, I don't know. But that's how it is. That's where we're at. Okay. So it's all emotion, I think, honestly. That's all emotion. And we can look at where we are in emotions right now. So, yeah. So this is the Thorpes, right? These are the Thorpes right now.
But I mean, yeah.
So explain to me why. Why does Jeremy keep going back to the Thorpes? Why? Right? Do I need to know why? I just need to know that he does. And there is a periodicity. He goes to work for 1 month. He quits his job. He goes back to the Thorpes. And they're going to keep going and repeats. It goes up and down. And you know when it's going to go up and down because sine wave. And as long as you can buy the bottom, sell the top, buy the bottom, I don't need to know why. I don't need to waste my time as why, right? They all have struggle sessions, and struggle sessions also have a periodicity. Human behavior has a periodicity. Everything has a periodicity. So as long as I know why, at a certain time, I guess I don't need to know the exact why as long as I have the timing correct. So there you go. Anyhow, how do you read the sideways stuff? So like three weeks ago, right, I started introducing that thing because Eric wanted to know a little bit more, and I talked about the auction market theory. Okay, so let me go back there. Okay, let's look at, let's see, should I look at this chart? Okay, I don't know, I keep using the socks one, huh? Okay, let's just use this one. I like using socks a lot, right? So last time we had a big move, July 2024. So that started a range that was being created. Okay, I guess, because you can see like there was like this heavy area here in November, March, okay, 2025. All right, and then we got the tariff tantrum. All right. So we can say that this is a range. This is a range. And what this is, the bottom blue line and the top blue line is where you could say there's a bell curve. All right. So standard deviation. So there's a standard deviation plus minus standard deviation. It's not a bell curve, but you can think of it like that. So the volume profile essentially gives you an indication of where most of the trading has happened. Most of the trading has happened between 198 and 275 on this semiconductor index. The average mean would be 227 based on volume. This is based on volume. Okay, volume. The volume decides where most of the people were arguing about price. They were arguing a lot over here, right, before it collapsed. And then once we got recovery, we started like arguing over here at 243. So a little bit above like the mean right there. And then if you think of it that way, okay, we can just start looking at things more closely. If you look at it from January here into the drop in late March, this is a range. This is a range. Okay. And I could see like, okay, if it's below this red line, 342, then we could say we're getting bearish. All right, it's above it, we're getting bullish, right? And you could see this as kind of like that Wyckoff, right? You can see like, okay, the change of behavior up here, okay, it happened here, and then we start building this range. The last attempt to go up just before Nvidia earnings in February was up here, and then we failed. So this would be the time to short, right? Because then you would go to the bottom of the range. We went to the bottom of the range, and then now we zigzagged, stayed at the bottom of the range because this was during the war. So we couldn't go back to the top. We stayed at the bottom. And then this is when we tricked everyone to go short. Everybody starts going like, whoop, looks like the market's going to go lower. Trump is going to blow up Iran, blah, blah, blah. It didn't happen. We bounced up. And then once we got that taco, we started moving up. And then we started following a trend. Okay. So we started following a trend. So now I'm looking for a new range, right? I'm looking for a new range. This could be a new range. This whole thing could be a new range. But in the meantime, every couple days, I just looked and see like, how was it moving? How is it moving? Every time you see like a few days, it goes back to the top of the range, goes back to the top of the range, goes back to the top of the range. That's how bullish it was. Everybody was going into semiconductors. Every time it dipped, it was going up. Barely was it like staying below. If it ended the day below and stayed below here, it might have started a new trend to go down. The first time we ever had that was kind of here on Thursday before Intel. That kind of gave me a clue that like we better get ready to short probably, right? This time here. Okay. It's like if Intel pumps it up, then that's probably the last time it's going to get pumped because we have to wait till AMD. Qualcomm isn't that major. AMD is going to be a bigger one than Qualcomm, right? So if Intel is going to push it up here, then that's probably where we're going to short because then we have like a week, like this week, that it can be pushed down. And it just happened. Monday and Tuesday it got pushed down because of OpenAI or whatever. I don't know. Anybody can make any excuse of why it happened, but we don't care about why. So now we have a range, right? So I could just make this a new range. Okay. So I could just keep drawing this now going all the way till whatever. So this could be the beginning of a new range. That's it. So that's all the auction market theory says. Like the auction market theory just says like if people are bidding it up, then they're going to try to stay towards the top rather than the bottom, right? If people are just like starting to just go and stay at the bottom. So every day watch it. Like if people just keep going towards the bottom, then eventually it will break. And then we're going to have to go to a lower range because people don't agree on the price. Less and less people agree that this is the correct place to be in. We have to go and find a new price at the bottom. So that's the auction market theory. And I guess you could call it a struggle session, right? It's a struggle session. It's a market struggle session. And then you look at the volume, you look at here. Okay, there was a huge amount of volume. Compare that to all the volume we've had. This is the largest volume we've had since we got out of the bottom late March, early April. That means there's a lot of people fighting in this region now. Like they kind of listen to Martin Shkreli. What did he say? Martin Shkreli said like volume is disagreement. That means a lot of people that wanted to go higher or lower can't agree. So they're all trading at this price here. They were trading at this price. Okay, so we've broken out today. We've gotten out of it. So if tomorrow we go back up to the top, but then we fail and we go back and start drifting lower into Friday, if we end up back here at the bottom of this range, watch out for next week. Yeah, you have to add them manually. I don't know. Is there an automatic way? It's like I think it's based on your what you want to do. Some people they do one for per quarter or per week. Okay. I just look at I kind of just look at the pattern here. Like I see I see a big pattern here, and then I start seeing a little pattern here, and then another little pattern here. You can kind of see, right? It's drifting up. It's drifting up like this between September 25th and November 25th, 2025th. It's just like this whole area was like a battle for people to decide if it's going back down or if it's going to continue up. And then once we got to January, the bulls won, right? You can see it. The bulls won. And then now it was just a decision of like, okay, do we continue even higher or we have to go back down again? Right? This was the fake out here. Okay. And you could tell like this was like a lot of people in this area fighting to keep it. So for this thing to go back down, what would happen is like you're going to have to dance down here before you go lower. So everything is like you get a range, sideways range, you get a cause, and then that cause will build up energy for you to go up or down. Okay, that's it. So all this energy was used for it to go up. And now we're going to start building another range here, probably into June, right? That's my guess is going to be like this. It's going to bounce here, or maybe it'll drop some more, and then the range will be larger. Maybe the range will go down here. You see that? And then it will just actually, and the real range is down here. Get what I mean? Like this could just be a prelude for it to drop back here, and then we're going to go sideways down here. Like I don't know yet though. It's up to the market. I can't figure out what people think is the fair price. What people think is the right price for something, what the price is right, it just depends on the market. The market, everybody's a voter. Every share is a vote. So you have to decide, right? We have to decide where it is. Our job is only just to guess where the winner will be. Is the winner up or is the winner down? That's the game. That's the game. Yeah. Okay, there you go. All right, guys. Oh man, 2 hours, man. I've been talking and babbling. Okay, well, I think that's enough. I don't think we need to talk about what the Thorpes are doing, but
offering. Yeah. But we can't. I don't know how comfortable we feel doing that because, like, frankly,
well, then don't offer.
You seem to turn everything into this sort of drama, but maybe we were beyond that. The last time we tried to help you out, you threatened to have us arrested.
That is true. Oh,
we passed that.
All right, we got an update
Are
from
we?
OPC.
I think so.
Update. All right, guys, hold on.
What's
OPC has an update. I thought I explained this to you in person, but I still wish you all the success in the world. Hope you get 1 million subs and 1 million views, but I'm just going in a different direction. Uh-oh, breakup text. It's nothing personal. I don't hate you or Jeremy. He knows what he's signing up for, and so do I. And I just don't want to sign up for it anymore. I'm happy to fix the boat if you guys get it up here, and I'm even open to getting the claiming channel started if you bring up a rig. But I've done my time in the Thorpiverse, and I have higher aspirations. I didn't take all those classes to settle for being a Boit side character.
Yeah,
I'm trying to play the YouTube game to win.
Feel like such a loser now. Oh, we're such losers.
Fuck.
Really? Didn't Ruby also decide she was going to move on, and Ava?
Yeah, I'll do.
And like,
well, he's moving.
You don't know what you got till it's gone.
Okay, so that's what happened some hours ago. And then I guess Jeremy said something that pissed him off, and this is where they're at now.
And so I got frustrated.
Yes, you did. I told you to take a break.
Then you said, I think I got this. And then you got frustrated.
Oh, yeah.
And then I came on and we both kind of ended up saying, okay.
Right.
And then came up with an idea to kind of make it a little more fun.
Yeah.
And without giving away our entire game plan, because as we know, it's cool to play hold your cards tight. Even when you have no cards,
Close
obviously.
Close to the chest, yeah. That's important.
So, I don't know if anyone's aware of, it's like a hobby called geocaching, I think it's called.
Yeah.
Where there's something you gotta find. That's sort of in a certain location, either by compass or, GPS or whatever. So we'll have a little bit of fun with maybe having Jeremy try to find something.
Yeah.
That supposedly wanted to get. Since we know where he's going tonight, maybe we can leave it somewhere where, with a little bit of ingenuity and that Boy Scout go-getterness and that masculine drive to succeed,
Yeah.
he should be able to find it pretty easily.
Yeah. And he'll get the content he was looking for.
And it'll make it more interesting because Jer just firing up a stream and rambling about I don't know what doesn't really get the views.
No.
But God forbid you collab with us, even though after we were on his stream, he's like, wow, it's a lot of viewers.
Yeah.
No reflectiveness whatsoever.
Wow, we have 100 in the chat.
And then 20 minutes later, 90, 20 minutes after that, 70.
Yeah.
Back down to about 30. Though he's a professional streamer.
Yeah, this is his career now.
The comedy career, which we tried to launch, instantly flamed out. Has not had a comedic thought since months ago. Winter, remember?
Winter, that's right.
Has not had a comedic thought since then. And I suppose wants us to revive it. No, thank you. I notice he's been playing Willie Nelson and Johnny Cash. Great stuff.
Yeah.
But he's like, yeah, I'm learning this stuff. Okay, so at 35 now, the new career is folk singer.
Something like that, yeah.
I've seen the guy sing. Sucks.
Riders on the
Dick.
floor.
Donkey dick. Zero chance of that. So, whatever, dude. It seems like he wants to spend a month in New England being a buttfuck, so we're gonna help him do that tonight. Let the buttfuck begin.
We're so back.
Because once we accomplish this, it's actually, turns out we have the cards and you have nothing.
Yeah.
And you can be a victim of that. Find a bridge. I suggested some bridge content. At least it would be good content, but you can also just, I don't know, whatever someone like that does. Anyways, you were trying to figure out the psychology, like what's going on here. Maybe Jack could help us. Like,
I was.
I don't get it. I think the best I can do is say, like, something seems like a good idea. Like, when it's, like, the first step is relatively easy.
Yeah.
So you take that first step, and then if you're an idiot, you just don't make any plans for the follow through, and when someone else is going to make it happen. I don't know.
Yeah.
So that's when Jeremy started calling them, but he never got through. He never called there. He was just like calling their phone and pausing the stream and making all that shit. I don't know. I didn't follow too much after that. But I don't think he got into contact with them. They don't have a StreamYards up, so last I saw, their stream ended randomly and Jeremy kicked up another stream, but I think Jeremy's just going to his camp place and whatever. Yeah, OBC always says that. He's playing his game too. Like, he's like kind of like wants to see what kind of up stuff they're gonna do to Jeremy. Then OPC comes in, saves the day, whatever, looks like a hero again. You know how this is the same repeat. We've done this already. We don't need to do this anymore. Even Lalo might even fly in for some God knows reason. He's not even doing law school anymore. Like, they've ran out of everything. If they actually do hide the laptop, that will probably be the most funny thing they could possibly do. Like, hide it in some park somewhere, in some random wilderness, and make Jeremy hunt for it. Yeah, but, whatever. I just like give a shit as part of the deal. They're not the worst. Yeah, they're not the worst, I guess. But, there will be better content. There should be better content. Like, Jeremy should have met up with Zeus IRL and then enlist the help of Zeus to go confront Ben and Grace and get the laptop back instead of going it alone. Like, the laptop is probably still in the apartment right now. And all they're doing is just making up games. And it's like, oh, the laptop's over here. You better go get it or whatever. Who knows? Fucking shit. It's waste of time. Complete waste of time. Yeah, it's not the worst idea. Yeah, they are kind of ripping off Ice Beside, but it would be funny to see Jeremy stressed out trying to find the laptop, though. Like, he's going to take it seriously because he can't possibly know that, like, whether or not they like, he keeps thinking like they wouldn't do it, but they would. It's abandoned property. There's no legal reason why, like, they should give it back to him. He left it in their hands for months now. It's like, it's technically abandoned property. It's theirs. Holy shit. Like, if you really cared about that laptop, you would have got them to mail it to you and made up a stink, but you didn't. So They could technically just dump it in a ditch and be like, go find it. It's under a bridge over here next to some crackhead. Like, it's not their problem. It's over. Anyway, stupid. Wants to pawn for Bud Ice 40s. You know, I had a video about pawn shops. Maybe I'll play it. Let's see. It should be a short video.
Okay, one of the earliest signs of a wobbly economy can be found inside a local pawn shop, where more people are trying to get their hands on some extra cash. We wanted to know, what's the state of the pawn economy right now? When we visited a shop in Stoughton, we found out things are changing.
This is very typical of the type of jewelry that our customers may bring in to sell or borrow on.
Customers walk into Empire Loan in Stoughton with an item and walk out with cash. CEO Michael Goldstein tells me after 40 years in business, he's seeing a
Michael Goldstein.
shift.
Definitely seeing more suburban customers coming in than we have in the past.
More women than men. Goldstein says rather than selling items outright,
Yeah, mostly my jewelry.
many get loans on same items over and over again. 90% buy their items back again, and they're just bridging a gap.
My customers basically are working and they have too much week left at the end of their paycheck, and then a bill comes up and they're like, oh man, what am I going to do about this?
I appreciate, getting a few dollars when I need it.
You can actually see, when you look at what is happening in your store, how the economy is going, even sometimes before Wall Street.
We think about ourselves as a canary in the coal mine, so to speak. Most of my customers don't necessarily have a lot of money in the market. My customer isn't the guy walking into the Ritz-Carlton, he's the guy holding the door at the Ritz-Carlton. When that price of gas goes up and unemployment starts to tick up a little bit, my customers are hurting.
Pawn shops have been a darling of Wall Street for about the last 18 months.
Entrepreneurship professor Bruce McKinnon with LaSalle University says that uptick at pawn shops is one of a few changes they're tracking right now.
One thing that's striking is before, the average consumer during the course of a year would shop at about a dozen stores. In the last 2 years, that's climbed to 21 stores in the average year. People are chasing bargains, period, especially in groceries.
More shoppers are using apps to plan out their purchases and stretch their dollars.
The number of store brands that are being purchased, the private label brands, people are seeing great value in that. Those are very strong signals that our consumer economy is getting a little more brittle, a little bit more fragile.
Back at Empire Loan, Goldstein says they're keeping a close eye on the price of gold and the jewelry coming in, so they can keep the loans going out and keep some of their customers afloat, even for the short term.
It really is not the pawn shops that you see in the old movies, for sure, and it isn't even really the pawn shops that you see on TV necessarily today.
Michael tells me the price of gold has a huge impact on their business. It's high right now, so is silver. And that means they can pay a good amount for items from jewelry to flatware.
Alrighty, guys. That's the pawn economy, guys. That's the pawn economy. Okay, so we got it going. All right, I'll see ya when the next event happens. I don't know what the fuck's gonna happen. We'll see tomorrow. Maybe I'll just wait for SanDisk to report after the market closes. I don't know. All right, good night.